Welcome back to Investing Talk Podcast.
Today we're looking at Ondas.
As usual, before we start, subscribe, like, and comment to this video to support the show. And if there's a specific company you want us to look into, leave it in the comments below.
So let's get into the analysis. The fundamental story here really is this explosive growth.
Right.
And it's driven almost entirely by one part of the business, the Autonomous Systems Division, or OAS.
Explosive is an understatement, isn't it? I was looking at the Q3 2025 numbers. Revenue came in at, what was it, $10.1 million?
That's the one, 10.1 million.
And that marks a jaw-dropping 580% increase year over year. I mean, that's not just growth.
No, that's the definition of an inflection point. You can actually see it in the numbers.
Absolutely. You see it in the guidance, too.
Exactly. That translates directly into massive forward guidance revisions. The company was originally targeting $25 million for the full year 2025.
Which was already pretty aggressive.
It was, but now they expect at least $36 million. And, more importantly, management is setting a really aggressive target for 2026.
Yeah, that's the number that really jumps out.
They're targeting $110 million in revenue for 2026.
Okay, so just to put that into perspective for you listening, getting to $110 million, that implies roughly 3 times growth off the new 2025 base.
That's right, 3x.
So what specific orders are actually fueling this? I mean, this kind of rapid acceleration in the OAS segment, where is it coming from?
Well, it's not just one thing, which is what's so encouraging. We're seeing significant wins across their whole portfolio.
Okay.
So specific contracts include about $2.7 million for the Iron Drone Radar system.
That's the counter drone system, right?
Counter UAS, exactly. And then another $3.5 million for their Apero unmanned ground vehicles, the UGVs.
The air and ground.
Air and ground. And on top of that, they recently highlighted a huge $14.3 million order just for their Optimus drone systems. It just shows really robust and diverse customer demand.
Okay, so the high growth is exciting, but you and I know that what really matters is whether it's sustainable. So what protects this momentum against competition? What is Ondas's unique edge here?
I think their moat is shifting. It's moving from being, just a pure hardware vendor.
Selling drones in a box.
Right. To becoming a full-stack autonomous systems integrator. And that involves proprietary AI, software, and hardware that span both air and ground applications.
So by integrating systems like the Optimus drones, the Iron Drone Radar, and the Apero UGVs, they're creating something more comprehensive.
Exactly. It's a solution that is just very hard for single product competitors to match.
It sounds like they're really focused on these high-stakes, mission-critical clients.
That's absolutely correct. Their technology is marketed as secure and, this is key, NDAA compliant.
Which is essential for any government and defense customer.
It's a non-negotiable, and it creates really high switching costs. A key credibility booster here was when a subsidiary was selected for Israel's Drone Hive's border security project.
Wow.
I mean, that's a huge stamp of approval. So they are squarely positioned to capitalize on that $38 billion defense tech spending tailwind and, the broader drone market, which is just enormous.
It's expected to reach, something like $147.8 billion by 2036?
A huge market.
We should probably also touch on the networks division. It uses that .16 protocol for rail and industrial clients. It feels a bit forgotten in all this.
It does, but it's important. While the revenue contribution is modest right now, it adds this connectivity layer.
A layer that could make their whole ecosystem stickier in the future.
That's the idea. Now, while the revenue story is strong, we have to look at the balance sheet.
Yes.
Following some recent financing moves, the company has a really substantial pro forma cash balance. It's been cited as high as $840 million.
$840 million. That is some serious firepower for growth.
It is.
Yet, and this is the disconnect for a lot of people, we see sustained negative free cash flow and high operating expenses, which nearly doubled to $18.1 million in Q3 2025. So how do we reconcile that cash hoard with the continuous burn?
That's the key question. And management explicitly says this period is a deliberate, heavy infrastructure building phase.
Okay, so they're choosing to do this.
They are. They are reinvesting every available dollar into R&D, into acquisitions like RoboTeam, and into scaling production to meet that 2026 revenue target.
So the goal is to bridge the gap to scale economics.
Precisely. Analysts believe this will lead to margin expansion once all those fixed costs are leveraged over a much, much higher revenue base. The capital is funding growth. It's not plugging immediate liquidity holes.
And it seems like the market is buying that story. Let's look at how it's reacting. The stock has been a massive performer. It soared, what, 280% in 2025?
At least, yeah. And recently hit a 4-year high. And if
Yeah.
you're a technical analyst, you're pointing to a golden cross phase and a classic cup and handle continuation pattern, all of which suggests momentum is, favoring the upside.
But what really confirms that the momentum isn't just speculative fervor is the institutional activity, isn't it?
Absolutely. You have to see who's buying. The Q3 2025 13F filings showed massive cluster buying. I mean, we saw Jane Street increase its stake by nearly 980%,
980%.
and Vanguard boosted theirs by over 110%. That level of institutional conviction, especially when you couple it with strategic moves management is making?
Like the HQ relocation to West Palm Beach to tap into defense talent.
Exactly. It signals real confidence in the long-term vision.
And they also brought in Brigadier General Patrick Houston as COO, which further underscores that focus on defense execution.
It all points in the same direction.
Okay, so let's do a risk check. The bear case. What are the primary concerns here?
Well, the concerns really revolve around execution and valuation. The company trades at a premium valuation relative to its industry peers, there's no question.
So the market has priced in a lot of success already.
A phenomenal amount of success. And the reliance on the OAS division means that any execution slips on these large defense contracts could materially impact revenues.
And we can't just ignore the capital structure moves either. The recent large equity financing deal, the resale filings for shares, that creates an overhang.
It does. While it provided the cash for this growth war chest, it introduces the risk of near-term dilution and price volatility.
So that's the trade-off.
Exactly. But this risk is, I think, mitigated by that strong $840 million cash balance and the robust backlog. So the focus now shifts to the catalysts that can validate what management is saying.
And those catalysts are coming up very, very soon. We have the critical investor day on January 16th, 2026.
That's the big one. That's where the company has to detail how it plans to hit that $110 million revenue goal.
They need to show the roadmap.
A clear roadmap. And then shortly after that, the Q4 2025 earnings report is expected. And there, investors will be looking for sequential revenue growth and some evidence of operating leverage starting to kick in.
So to sum it all up,
Ondas presents a really compelling, high beta growth story in this autonomous defense sector. The question for investors is whether their deep cash position and aggressive M&A can successfully bridge the gap from today's heavy investment phase to the projected scale economics of 2026 and beyond.
definitely an interesting moment for this story. Make sure you subscribe to the podcast so you don't miss our next analysis as these catalysts unfold.